Hello guys, it's Tokyo here, and this video is about structure, right? There's a few people who seem to be a little bit confused with structure, and I'm going to explain the importance of knowing structure on the higher time frames and how you can use it on the lower time frames. Before I get into the video, I just want to thank everyone who has purchased the playbook. People are experiencing amazing results, and I thought it would be a good idea to share my daily outlook on the market. And I have some affirmations in there, and it's really helpful. There are some lessons on structure, amongst other things. So thank you all for purchasing the playbook, and I am glad that everyone is enjoying it, and the course will be releasing soon. So let's just get into the video, and I want to show you guys some tricks when you are on the charts. And this is TradingView that I'm using. I have this in dark mode. Sometimes I take it out of dark mode, but whatever suits you. So let's get into it. Okay, guys, so this is the monthly chart. I like to start on the monthly chart just to see the direction of the market. And I want to let you know, guys, that the chart is not stuck. You should move the chart around when you need to see exactly what's going on. So normally when I get on the monthly time frame, right, because that's where I start, right, I like to move the chart over, right, because I want to see what overall trend we've been having these last few months. And this is GBP USD, and I'm not using US30 as an example, simply because I want to show you guys that if you can trade one pair, you can trade any pair. So as you can see, guys, on the monthly, I see that we are headed in a downtrend, right? Month after month, we are pretty much bearish, right? We have some months that we go up, but for the most part, we're overall bearish on the highest, one of the highest time frames, right? And so, and just like if you came into the market at this particular point, you will see that this in this area we were bullish, right? So that's where I like to start to get my bias, and then I like to move down to the weekly time frame, and I see that the last few weeks we are bearish, right? So it's giving me an idea that this pair, right, is pretty much bearish. And I like to go to the daily time frame. This is my golden time frame, and this is where I like to spot out all liquidity, right? And I see that we have gone past the previous low, right? And so that's just added confirmation that we are bearish. So already I am moving down from two different time frames, and I have the same conclusion that we are bearish, right? And so let's go on the daily time frame, and I want to let you know, guys, move your chart around, right? If you need to stretch it up so that you can get some clarity, absolutely do that, right? Move the chart around, because sometimes we get a chart, we get on TradingView, and the chart looks like this, and it looks pretty much sideways, right? And this can be really confusing for a lot of people. So move your chart around, right? Stretch it out if need be. Okay, so let's get into structure. And I like to spot out structure first before I get into liquidity, but we'll just focus on structure for now. And so, guys, I'm going to start here at this high, and I'm going to start at this low, lower high, lower low, lower high, lower low, higher high, higher low, lower high, higher low, lower high, lower low, lower high, lower low, higher high, higher low, lower high, lower low, lower high, lower low, higher high, lower low, higher high, higher low, lower high, higher low, lower high, lower low, higher high, lower low, right? And this is what I like to do, right? So we know that my conclusion is that we are at a lower low, right? We are at a lower low, right? And I know that what comes after a lower low is a lower high, right? To continue down for a lower low, right? And this is how you can get your, this is how you can get into the market, just from structure, right? So I know that on a daily time frame, we could come into a higher low, right, to continue down for a lower low, right? And that's just as simple as I can put it. But, right, I want to show you guys, as I was making my highs and my lows, right, I noticed that there are breaks of structure, and that's important, right? We broke structure here when we made a low, right? We broke structure here when we made a new high, right? There are constant breaks of structure. There are constant breaks of structure. So we see that we are constantly breaking structure to the upside or the downside. It's very, very important to know where those breaks of structures are, right? And I want to give you guys another tip. If the candles confuse you in any way, right? I want to show you that you can go over and use the line, right? And because we are on the daily, we don't have to get too caught up in all these little moves here. We can simple tackle this like this, right? We don't have to get too caught up in those smaller moves. So we notice we keep breaking structure. We keep breaking structure, right? We made a lower low, we came up for a lower high to continue down for a lower low, right? We made a lower low, lower high, lower low, right? We can be making a lower, higher low for a lower low, right? And so we continuously break structure to the upside or the downside, right? So when we break structure to the upside, right? See here, we had a lower high, we made a lower low, right? We came up and we broke that structure, right? So the market did not turn around and go and make an uptrend, right? We simply took out this liquidity right here. And I know this confuses people so much, right? Because you think to yourself, we are supposed to be making lower highs, lower lows, lower highs, lower lows, right? So when we have the market come back up into making a higher high, right? We are simply taking out liquidity. And this was liquidity, right? And you'll understand that more and more as you get into the charts, right? And like I said, whenever you're confused, you can go to the line chart, right? So with structure comes liquidity, right? So what I like to do is I like to look for my daily high and my daily low. And you can also use the line chart for this, right? So this is the last push up, right? And this is the last push down on the daily time frame. I'm going to go back to the candles, right? Because trying to figure out all of this, of course, we need to know what's going on to the left of the chart, right? We absolutely do need to know what's going on to the left of the chart, right? So once we figure out what's happened to the left of the chart, right, we need to be focused on a particular range, a trading range, so that we don't get too caught up in what has happened already. So this is the daily time frame, and this becomes our trading range, right? So we have our daily high and our daily low. And I want to let you know, guys, that your chart should be readable to you. If you need to write down every single thing that you spot out in the charts, you absolutely should, because the chart should be readable to you. So we have our daily high, we have our daily low, right? And now I want to look for things like point of interest areas and order blocks, right? Yeah, point of interest areas, which are order blocks, and imbalance, right? So I like to spot the imbalance in the charts, and then I like to go target the candle before that move there. And sometimes the market will be choppy, and it may be hard for you to really see what's going on here. But that is okay, guys. There are many different time frames, and we are going to go down the time frames and continue with structure, because I want to show you how we get from the higher time frame, right? And this time frame is good for swinging, right? But some people may be interested in scalping. So when you are scalping the market, guys, it is important to try not to go against the overall trend of the market so that you don't get burned out, right? Have you ever noticed that you're on a smaller time frame and then you're really, really profitable, but then your profit turns into negative really quickly? It's because you actually traded against the trend, right? And so I want to help you avoid trading against the trend. And do not get me wrong, you can absolutely trade against the trend as long as you know where to get out. But like I was saying, sometimes your scalp is really profitable and then you go far into the negative, right? And it's because you are trading against the overall trend on the higher time frame. So this is my bearish point of interest order block, right? When the market comes here, right? And this can also be known as a supply zone, right? And some people do trade supply and demand. I do like to point out my POIs and imbalance and things of that nature. And so guys, here we have imbalance. Right, we have imbalance here. I normally put a block, but I don't want to put so many blocks, right? So now, guys, I'm just going to look for all the imbalance. This is also imbalance because we do not predict the market. We simply react to the market. So if I can get an idea of where we might be making our higher low or where the market may go for liquidity, right? I can absolutely see that we could possibly come up in a longer term, right? And come back down from here. If I was interested in taking this as a swing position, I would look for an entry to take the market up, right? But just because we have a bearish order block here doesn't mean that we'll take the market down from there, right? Because we have this imbalanced candle here, right? This institutional candle. This is another one of my POI bearish order blocks, where I would hope to take the market down from, right? So I'd be interested in an entry from here to take the market up here, right? Or here, right? Because this would be an extreme order block because it's above here. But if the market comes into this OB, right? And we start to get distribution breaks of structure to the downside, a retest, and it continues down, obviously it was not ready to go here, right? And that is okay. So guys, I'm looking for my bullish order block. And this would have been a candle that I was interested in. Obviously, we went past it. So I'm going to go back to the weekly just to get a bullish order block, right? So I do see an institutional candle here, right? And I'm just going to go ahead and use this one as my bullish point of interest area, right? And as you can see, guys, we are in the bullish point of interest. I'm going to just put that green for bullish, right? And you have to stop being afraid to travel through the time frames. You have to. And as you can see how we are reacting, right? It wasn't so clear to us where the market was, right? A few minutes ago, right? But now it's getting pretty clear to us what the market is doing, right? Will I take the market up from right here? Absolutely not. This is a rather big order block, right? I'm just going to pull out the fib. And I'm just going to mark 50% of this order block, right? And then I'm going to be done with the fib, right? So the market can come down to 50% of it. The market can come down further, right? Just because we are in the bullish order block doesn't mean that we are ready to go up, right? So we have our imbalance, right? And I just want to go over the structure one more time before I go down the smaller time frames. And as I go down the smaller time frames, it's nice to refine your order blocks, but for the most part, I like to keep my order blocks there, and I like to create a point of interest within these point of interest areas here. And so I just want to double check for my breaks of structure, right? We came down, we broke the structure, made a new low, we made a lower high, right? We came down and we broke this structure right here, right? And like I said, people, mark everything, right? Because the last thing you want to do is come back and not know why you selected a particular area, right? Or what this line indicates, right? So it indicates a break of structure, right? And we made a lower low. It seems we made a lower high, and we actually did break this structure, this low, for a lower low. Okay, so let's go down to the 12-hour and check it out. As you can see, we're starting to see things a little bit more clearly, because when you go down the smaller time frames, you get a lot more detail. So on, we are focused on our trading range, right, which is our daily high and our daily low, right? And we're focused on this area right here. We already made our analysis based on what happened to the left. So pretty much this is our focus, right? The name of the game is to, right, try to get as close as possible to predicting what the next move may be based on structure, based on liquidity. So we see that lower high that we made, right? And we see that lower low, and I'm seeing that the highs are not too high, right? We did not come all the way up to this imbalance, right? So that just goes to show that the market is not ready to go up yet. But I am noticing that we started to create liquidity, right? This is liquidity here, right? So we know that at some point, the market is going to come to take out these highs right here, right? And I'm seeing more liquidity, right? We have these highs right here, and above this liquidity, right, is this imbalance. And when I say liquidity, right, there are people who have their stop losses right above this area here, right? And that creates liquidity. There are millions of people who have their stop losses in this area, and that has created liquidity. We have millions of people who have their stop losses in this area, and that has created liquidity. And above that liquidity, guys, we have imbalance, right? We have imbalance, right? So in the playbook, I did update the playbook, guys, and I did state that there are good entries that can be taken from imbalance, right? The market could come up, take out this liquidity, fill in some of that imbalance, and head back down. Or it can take out this liquidity, fill in the imbalance, and come to this bearish point of interest area. Or the market can go all the way up in a bullish pattern, right? Take out this liquidity, fill in this imbalance, blow past this bearish order block, right? Take out this liquidity, fill in this imbalance to come up to this extreme order block, right? To come back down, right? That's what can happen. So let's continue down, guys, so we can continue to get more information, right? And as we can see, we have this candle here. And it's within our point of interest area. Let's go to the 4-hour. Right? So we're seeing more and more information. We're seeing more candles, right? We're just getting a more detailed image of what we already seen, right? And so let's continue down. So this is the 15-minute chart. As you can see, we hit the daily low, right? That's why that became our daily low. And I'm seeing that we are trading in a range at the moment. This is kind of a trading range. And what happens with ranges, right? there's liquidity being built from the top of the range to the bottom of the range, right? So normally what will happen in the situation is price will come up, take out these highs, take out the lows, right? And continue up. Because although I'm overall bearish on this pair, I do absolutely see the market going up for liquidity, right? And so on the 15-minute chart, we have that liquidity up here, right? We remember that we have that liquidity up here, right? I'd just be looking for entry to take the market up. So we see here that we have a bearish OB here. We have imbalance, right? And we're mindful of the liquidity at the top. We're mindful that there is liquidity at the top. And it's about getting that entry. And as I'm talking, guys, we see that we have this bullishness going up, right? And we took out that liquidity up here at the top of this range. So what I would do in this situation, guys, I will wait for a retest to enter the market, right? As we can see, we're creating this imbalance here, right? If price decides to go up, come back, retest. This is where I would interrupt and I would target here as my first target above this imbalance here, right? This is that 15-minute, right? I would target here. And as you can see, this is where the 15-minute point of interest is, right? I would see if I would target here because I would see if the market is going to wick up here and reverse down to make a new low, right? And then come up for this. You never know how far up it's going to go because it, to me, is overall bearish, right? But this is ways that you can get in and out of the market and make some money. Sorry about that. This is ways that you can get in and out of the market and make some money. Let's go down to the 1 minute and see where we can get, where we could enter the market at, right? So when price came here to the daily low, right? And it started to create, let me just blow that up. And then you can see it's really taken off now, right? Price started to create new highs, right? Higher low, higher high, higher low, right? We can start to get point of interest areas within a 1 minute time frame, guys. And I'm going to turn that green. So within my bullish point of interest, guys, I did travel down to the 1 minute time frame, right? And I did notice that we hit the daily low and price started to accumulate, right? And it took off from this point of interest area, right? But it came back and it retested this area, right? To take off, right? And a simple move like this, guys, simple, so simple, just by going from the higher time frame to the smaller time frame, guys, right? You could have set yourself up to get into this market. Your target could have been a previous high. And because we know how much liquidity there is on the higher time frame, guys, right? Because we know how much liquidity is there, we could have paid ourselves, right? We could have took profit here. We could have targeted this next high, and we could have targeted this final high, right? But guys, because we know about liquidity, we see that there are relatively equal highs here, right? This could have been our target, right? Right above this high. And this is a 12 to 1. This is a 12 to 1 trade, guys. If you were interested in getting in and out of the market, this is a 12 to 1, and it's just like that. Creating, finding the structure, finding the liquidity, right? On the daily time frame, we knew that we had to make a lower high, right? A higher low, rather, right? We made a lower low, and we knew that we were possibly going to make a lower high, right? And so we knew that we were going to see some form of bullishness, right? And so we simply traveled down from the higher time frame to the smaller time frame. And although we are overall bearish, right, we did know that after a lower low, right, is a lower high, right? And the key word in that is a high, meaning that the market was going to move up, right? And this was a really, really, really good trade, right? The market took off from this area, broke this structure, this high. It came back, it retested, came into our 1 minute point of interest area, and it continued up. And if you were interested in a holding this position for a little bit longer, right? We know that there's imbalance here, right? You could even target half of this imbalance, right, on the higher time frame. You can let the market retest, and if it looks like it's going to continue to break structure to go up, this can be a target, right? And if the market decided to retest and it looked like for some reason it was wanted to continue going up, we know that there's liquidity here. We know that there's imbalance here, guys. So when I'm in the market, this is really what I do to get into these trades. Of course, with US30, this is what I do, right? And guys, just because I've seen bearishness doesn't mean that we are not ready to break structure to form into bullishness, right? Right, which would mean the market taking out these highs up here, retesting and continuing up, right? It doesn't mean that. But guys, this is a really small term move. As you can see, that move that we caught on the 1 minute is still here, which is still here, a part of this bearishness, right? And that's just what this is. And in the next video, I will be going over more about finding the correct order block. I think I have a video there, but people are still asking me a question, so maybe it wasn't the clearest. I do have a notebook with some videos that I do want to go over, such as liquidity. This was for structure and order blocks, right? And I do want to make another video going over my experience with my Forex funds versus FTMO, guys. And I'm really, really, really liking the FTMO swing account. Even if you are not a swing trader, the FTMO swing account has more flexibility. You are able to trade during the news. There's less leverage, right? For people who like to, who have a habit of over leveraging, right? But we all want to practice discipline. So guys, thank you so much for watching. Please like and subscribe so that others can get to see this content and that you are updated when I do release new videos. And I want to thank you so much for the subscriptions. We are now over 100 subscriptions and it's maybe been 35 days. And that's a lot to me. So I'm really happy about that. And if you have any questions, please go to the comments. I do read the comments and I do make videos based on what I am asked to provide information with. And I'm so happy to see that a lot of people are becoming profitable. I was a struggling trader. I did blow many accounts. So I know what that is like. And so guys, yes, please comment if you need clarity on anything or you would like me to produce a video with a particular topic. And thank you.